Hey, it's Richard with Matthews Wealth Management. We're going to do the October market update. It's now December, so I'm way behind on this. So I'm going to try to make this one extra quick, and then you can go right on to the November one. So anyway, we did our big rebalance in September 17th specifically, and if you recall, we had a nosedive basically the day after, which was pretty cool timing. Very lucky timing. I don't do market timing. But anyway, since then, it's been different. We've got decent recovery of a lot of asset classes, especially U.S. equities, mainly the growth, 7, 8, and 6%, leading all the values. It's just this hit or miss value growth rotation right now. A lot of it has to do with money being printed, and that's kind of the key topic area we'll get to. But we can see a downturn here in short-term and intermediate-term bonds, as well as high yield. We saw that risk was now back on the table since QE is basically ending. Real estate kept going. Oil took off. We've got some commodity inflation, higher demand, I guess, for energy now. But gold came up a little bit. S&P up 7. Dow Jones moderate as an index, 2.6. So a lot of my clients are kind of in that world. Dow Jones moderate, definitely better than the 2.66, but still, it was an interesting recovery after that September drop. I'm just going to skip to year to date. Huge numbers in equities here, and that definitely comes through on S&P, up 24% year to date, moderate portfolio 9. The highlights here are oil up 77% from this time last year, or actually from January, 77%. So that was post recovery, if you will, or opening from Biden's election, and now there's hope and everybody's going to get back to work. But real estate's up 28%. I've been behind on that. I don't know when it's going to collapse. This is income real estate. This isn't flipping houses and stuff. So think of those as two different types of the same asset class. But anyway, jump to key topics, because this is really the soapbox I'm going to try to not do too much on. But there's this big discussion about supply chain and I guess rebooting and these ships off of the port and everything. And is that causing inflation, or is that caused by inflation? So the way that Jen Psaki will mention is that the supply chain is causing inflation, and once we fix that at the docks, then we'll see this transitory inflation come back down. So will that actually happen? My argument would be that the inflation of money supply is what has created artificial demand, which has increased the need to bring in all these things off the port. So it's not that we stopped spending money during COVID. We've actually ramped up and spent even more money that we didn't have production for, and so we're seeing it bottleneck in the supply chain. Plus, there's a lot of just changes on how products are imported, or how they're produced and how they're distributed. A lot of people are ordering stuff at home, so Amazon and Walmart and blah, blah, blah. There's a big reshaping of our economy on top of artificial demand, and that's what inflation actually is. It has nothing to do with prices. Prices are what happen after inflation occurs. So anyway, another kind of pet peeve, we've got 61% of U.S. paying $0 in federal income tax. So pay your fair share. Then we've got 50% of U.S. workers, this is kind of problematic as to what's causing the previous thing, are earning less than $34,000 a year. That's half of the country is earning under $34K. No wonder they're paying nothing in taxes. But how's this inflation going to help them? It's going to crush them, right? I mean, this is the big thing. They're now saying inflation is good because it shows that people are buying more stuff and we can afford it. We've got all this money now. But this is showing that wage growth down 6.1% with an inflation going through the roof. Who gets hit the hardest? Is it the greedy, wealthy capitalists, or is it the workers, right? I care about workers. I care about workers. I care about revenue. Like, this is just, it's almost by design that we're seeing it go this way. But M2 is how I'm measuring and tracking, just to give you a broad picture of how many dollars are out there. 20 trillion, 994 billion, 200 million. That's up about 0.8% in the last month. We're up 8.25% since January, 12% since this time last year, 36%. So does it feel like that? It does, doesn't it? Go figure. If you track how many dollars there are, eventually prices go up, and it feels like cars cost this much more and food costs this much more, and we've got Thanksgiving to worry about as far as the menu there. But Inflation's here. Is it transitory or not? We'll find out next month. But yeah, hopefully that was a quick one. I'm going to do the November one now.